What's up everybody? Nate here. So there has been a ton of talk about inflation in the United States for a super long time now. Mainly because inflation is at a 40-year high of around 7%. And with inflation being this high, that is causing a lot of strain on everyday Americans and on the markets in general. From the housing market to the stock market, everyone is feeling the effects of inflation right now. Almost every day I see news story after news story about inflation and who is the ultimate cause of it. I've seen countless reports saying that inflation is actually former President Donald Trump's fault, and I've seen just as many reports saying that all of the inflation that we're experiencing is because of Federal Reserve Chairman Jerome Powell. Other reports say that it's actually current President Joe Biden's fault, and some are saying that it's nobody's fault. Inflation is just natural and nobody is to blame. So with all of that being said, I want to set the record straight right now and talk about inflation and who is actually responsible for it. And the answer here might completely shock you. So today we're going to talk all about inflation, how we got to inflation being at a 40-year high, what inflation is going to look like in 2022, and what the United States and our economy is doing right now to lower inflation for the future. But before I get into all of that, do me a quick favor and smash, hit, or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. Now let's talk all about inflation, and let's start with today. What is going on with inflation today? Well, like I said, by December 2021, inflation hit a new 40-year high of around 7%. We haven't seen inflation this high since the late 70s and the early 80s. And what that basically means is that everybody in our economy is paying more for all of the same things. So inflation by definition just means that the monetary supply of a country starts to increase. When that happens too fast, then you can see prices all throughout a country go up very rapidly because you now have more money, which in turn means that people have more money to spend. If people are spending a ton of money, then they're buying more things. Companies then have to scramble to meet demand, and they have to produce more products. Well, producing more products comes at a cost to companies. They now have to pay more because they have to build new factories or hire more workers and just do more in general. That comes at a cost, and they trickle that cost down to you, the consumer. So inflation has gone up, and we've seen the price of everything on average go up by 7%, but most experts and economists believe that inflation is actually a lot higher than that. Based on the CPI or the Consumer Price Index numbers, inflation was 7%, but that is an average based on all of the industries in the United States. It doesn't show a lot of outliers. Like for instance, gas prices in the US have increased by over 44% over the past few months. And energy costs in general are starting to go up too. So in response to all of this, Federal Reserve Chairman Jerome Powell has announced that the Federal Reserve is going to get super aggressive on inflation in 2022. Although it's February 2022 and I don't really know where the Federal Reserve is because they haven't actually done anything yet. So I guess I'll just keep looking. Mr. Powell? Has anybody seen Mr. Powell? Everything that the Federal Reserve is slated to do doesn't start until at least the spring of 2022. They're going to be reducing their asset purchasing on Wall Street and raising their benchmark interest rates up from around 0%. All of that will hopefully decrease demand in the United States because Americans just won't have as much access to money. You see, when the pandemic started, the Federal Reserve dropped its benchmark interest rates so that Americans could go out and get a loan a lot easier. This ended up causing some big problems though, because now the mortgage market was exploding. Everybody saw an opportunity to buy a house, and pretty much everyone and their grandmother ended up buying a house. It was much easier to trade and buy cryptocurrencies and stocks on margin as well because rates were so low. The risk wasn't as high to traders, so the stock market exploded after seeing one of its fastest crashes in stock market history. But I don't want to get too ahead of myself here. How did we actually get here, like in 2022, with this level of inflation? Well, it all stems back to March of 2020. That is when the pandemic was starting. So a lot of things were going on during the pandemic, but the main cause of inflation and our economic woes for the past 2 years has to do with money printing and the lack of security in the job market. As soon as the pandemic started to pick up in the United States, governments around the country started to institute economic lockdowns because of social distancing orders. So they didn't want people in large groups hanging out around each other. So that's why none of my friends wanted to hang out. But what that also meant is that businesses couldn't really function like they used to, especially your big factories and chain stores that had hundreds of employees. They were put on lockdown, which meant businesses didn't function for a long time. With businesses out of work for an indefinite period of time, well, that means they weren't going to produce anything, which means that consumers couldn't really buy anything. And on top of that, nobody was going to be making any money because anybody that worked at those stores, well, you're not going to be making any money. And now businesses aren't going to make any money because consumers aren't buying anything, which basically meant that our economy was going to collapse because nobody was spending any money. Obviously, the federal government couldn't let that happen, so they ended up printing around $2 trillion in economic stimulus. This stimulus was all under the umbrella of the CARES Act, and the CARES Act was basically going to lift our economy out of a recession. But it was a lot bigger than that because our unemployment rate was also around 15%. So the United States government had to continue giving people money because nobody was making any. So this leads us to problem number one, and it's all the way back to March of 2020. The president during that time was Donald Trump, and he signed off on the CARES Act, which was valued at over $2 trillion. Now let's think about an alternative here. Say you're the president of the United States and the CARES Act is sent across your desk. Are you going to sign it or are you going to let it fail? There's two likely scenarios here. If President Donald Trump didn't pass the CARES Act or any stimulus bills, well, that basically would have meant that companies and everyday Americans were going to go into bankruptcy. First of all, businesses weren't going to be able to keep their employees, so they were going to shutter their doors. Second of all, Americans can't pay any of their bills, so now you have banks and Americans going into foreclosure on their homes and, like I said, bankruptcy. But things are a lot more complicated than that because you have to ask yourself, whose job is it to make sure that the United States is secure financially? Is it up to individual Americans to make sure that they have thousands of dollars saved in case our economy collapses and they can't work for several months? Is it on businesses to have millions, if not billions of dollars saved in case our economy goes into a recession and nobody's working? Well, that was the question on all of our Congress members' minds and the President of the United States, Donald Trump, at the time. But that question ultimately becomes irrelevant if you kind of look at the bigger picture. The United States government cannot let thousands of businesses and millions of Americans fail all at once. That's bad for them. So they're not gonna let that happen. And the fact of the matter is that businesses and Americans didn't have the savings. So even if the federal government said, let them fail, that was ultimately going to backfire on them. So their hands were pretty much tied in signing a lot of those bills. And remember, it was an election year. So President Donald Trump wasn't going to let our economy crash when he was trying to get reelected. So that's problem one. But then we also had some new problems arise in 2021 and in 2022. Our second problem here is President Joe Biden. So in January 2021, Joe Biden was elected, and he kind of was just coming in on all of this mess after the Federal Reserve and the United States government printed a lot of these bills. But the fact of the matter is he didn't really help to stop all of the money printing. Like I said at the beginning, inflation technically means your monetary supply is going up. So the United States government printed trillions of dollars in 2020 to help lift our economy out of a recession. In doing that, they printed more money than they have in a very long time. Naturally, inflation is going to go up because people are going to start buying more. That led to supply chain issues, and we're still facing supply chain issues almost 2 years later. But within his first year, President Joe Biden had a lot of things that he promised voters that he was going to get done. One was his Build Back Better bill, and two was his infrastructure bill. Both of these bills have trillion-dollar price tags, which means even more money printing from the United States. This is where things kind of get difficult because it's all about timing. Now let's talk specifically about the infrastructure bill. The infrastructure bill is supposed to support and rebuild a lot of America's frankly crumbling infrastructure. We have roads and bridges and electrical systems all throughout this country that are falling apart. They were built 40, 50, and even 60 years ago, and they've barely been kept up on. Well, the infrastructure bill hopes to rebuild a lot of those falling parts. And things are crumbling every day. So President Joe Biden and his administration wanted to get this bill passed sooner rather than later. And while it might be good timing for the United States as a whole, it is not good timing in terms of inflation, because that bill was valued at over $1 trillion. Now, the Federal Reserve is going to have to print even more money on top of all of the money that they printed in 2020. That money printer's gotta be getting tired by now, right? And on top of that, President Joe Biden is going through with his Build Back Better bill, which is going to create even more inflation for our economy in the future. Now, the Build Back Better bill hasn't actually been passed yet, and again, it's all about timing. That is more of a social spending bill. So it's more focused on our culture and our economic systems rather than the physical building blocks of America. And again, this issue is a lot more complex because you have to look at both sides here. On one side, our United States infrastructure definitely needs to be improved. But again, you have to ask yourself, who is responsible for that? There are some federal roads and bridges that can be kept up on, but a lot of this money is not going to go towards federally regulated roads and bridges. A lot of it's going to go to the states, and then the states are going to decide how it should be allocated. So is it the federal government's job to police all of our roads and bridges throughout the United States? Well, honestly, I just don't know. But again, it wasn't being done, and it's something that needs to be done whether you look at it from the state or the federal level. We have to be able to use the systems in our United States. If we don't, then our growing population is eventually going to falter. We can go back and forth all day on if President Joe Biden should have passed that bill or not, but the fact of the matter is that he did. So the infrastructure bill is contributing to inflation, more money being poured into our economy. And the last thing we need to talk about here is the Federal Reserve and Jerome Powell. The Federal Reserve is in charge of a lot of the monetary policies in the United States. They're also in charge of inflation. They gotta make sure that inflation doesn't get way too high or is way too low. They have now been tasked with lowering inflation, but the problem is they have directly contributed to inflation in 2020, 2021, and in 2022. Not only did we have trillions of dollars in stimulus, but the Federal Reserve also dropped its benchmark interest rates because they wanted to couple all of the stimulus with people being able to actually use it. So they dropped their interest rates so that people could go out and get loans and get money a lot easier. That would help banks and that would help markets because now anybody can get a loan. They also launched a quantitative easing program, which meant that they were going to start buying hundreds of billions of dollars in corporate bonds, treasury notes, and mortgage-backed securities on Wall Street. And they did this every single month. They ended up racking up a balance sheet equal to around $9 trillion. All of that was to lift the New York Stock Exchange out of one of its worst crashes in its history. But this is where things start to get interesting because the question is, did they really need to do that? Experts and economists on both sides haven't really come to a consensus on yes or no yet. The stock market crashing is bad for a lot of reasons. It's bad for investors because now all of that money that they're making is starting to lose value. All of the assets that they've purchased are starting to lose value. The stock market and other assets are ways that people can beat inflation. And as the United States government prints a lot more money, well, we need assets in order to beat inflation. If the stock market isn't beating inflation, well, now you're losing kind of on both ends. Not only that, but there's a lot of other things that are tied to the New York Stock Exchange. I mentioned mortgage-backed securities and a lot of people's retirement funds. All of that ends up tanking forever, then people can't retire. And banks are gonna lose a lot of liquidity because of the mortgage-backed security market. Well, seeing that, it makes sense to me that the Federal Reserve would wanna step in. However, they have been buying mortgage-backed securities, corporate bonds, and treasury notes for almost 2 years now, even as our GDP and economy has started to improve. This has led the stock market to get super risky with how it's going to invest, and it's also led people to get even riskier with investments in general. That's part of the reason why we've seen cryptocurrency explode over the last 2 years. There was so much free money being poured into our economy that investors were just throwing it at anything and seeing if it stuck. So they've raised their interest rates. They started to buy billions of dollars in assets on Wall Street, but they also talked about inflation kind of in the wrong way. For most of 2021, when people were starting to get worried about inflation, Jerome Powell basically came out and said, don't worry, that inflation thing, it's not a big problem. It's gonna go away. It's completely transitory. Transitory basically meaning that it's temporary and that once our supply chain issues are resolved, inflation is going to go back down. Well, once things started to get really bad, they reverted that statement, and Jerome Powell said that they need to retire the phrase transitory. And this came after we started to see inflation go up month after month. What did that actually do though? I mean, that was just talk, right? Well, with the Federal Reserve basically not telling the public the whole truth about inflation, that gave the public confidence to continue to spend money like they normally would. If the public is not afraid to spend money, well, that's good for your economy. As soon as the Federal Reserve starts saying that inflation is terrible and it's way higher than we expected and it's not going away, then the public is going to get scared. They're not going to want to go out and spend money anymore because they know that the price of everything is going to go up. That could lead your economy into a recession because nobody is spending anymore. But it also meant that the Federal Reserve was basically lying to everybody about inflation, and now inflation is getting worse and worse because people were continuing to spend at record rates. And it wasn't just Jerome Powell and the Federal Reserve. Treasury Secretary Janet Yellen reflected this, and President Joe Biden also reflected this. They all said inflation is transitory and it's going away, but as soon as the end of 2021 was starting to hit, they changed their message. And then Jerome Powell said, my bad guys, that inflation thing, actually pretty bad. He then said that the Federal Reserve was going to use all of its available tools in order to drop inflation, but the problem is they haven't done anything yet. It's all been a lot of talk, which has affected the stock market, but they're still buying billions of dollars worth of assets on Wall Street, and they haven't raised their rates yet. So now that you know all of that, where exactly is inflation headed in 2022 and beyond? Well, I hate to break it to you, but inflation is most likely here to stay, and the reason being is for two different reasons. For one, I don't know about you, but the United States federal government loves to print money, and that money printing is not going away anytime soon. I mean, what exactly is the federal deficit right now? The US government owes like what, $29 trillion in debt? So naturally, the Federal Reserve is gonna have to continue to print money in order to pay all of the bills that the United States government has accrued over its 200+ year history. And that's good for the federal government because that means that all of the bills that they pay off over time eventually are going to be cheaper. Because like I said, when you have inflation, that means everybody is spending more. You have more money now. Ultimately, that means the buying power of all of the dollars goes down because the value of your money decreases too. Money becomes a lot cheaper, and every single day, the US dollar is getting cheaper. That's because more people have it. So think of it like this. If there's only $100 in the United States economy and you have $1, well, you hold 1% of all of the wealth. That's pretty good. But if the Federal Reserve decides to print an additional $100, well, now there's $200. Your $1 is not valued at the same amount anymore. You only hold around 0.5%. You need more money in order to have the same value. This is what's going on in the US government, but on a scale of multi-trillions of dollars. So every time the United States Federal Reserve prints a dollar, bills for the United States federal government start to go down. Not technically, I mean, the dollar amount is still the same, but the value of the money is cheaper. They can now pay off all their debts cheaper because our money is inflationary. If it was the opposite, well, the United States government would basically collapse because now all of our dollars are worth more. all of those bills that they've taken on, all of that debt is actually growing now. But that does not happen. So inflation isn't going anywhere. But will it actually stay at this historic rate? Well, that is yet to be seen because it really just depends on what goes on with our economy. If inflation continues to rise, then naturally people are going to spend a lot less money. If the Federal Reserve raises interest rates anyway, well, then people are going to have even less access to money. That means that there's consequences on both sides here. The federal government does a lot to lower inflation very quickly. Well, then yeah, inflation will go down, but at what cost? The cost is potentially a recession in the United States because basically you have nobody spending money, nobody getting risky with their assets. However, if they decide to do nothing, kind of like what they're doing now, then inflation is going to continue to rise because people are just going to spend everything that they have like they normally do. And the price of everything is going up, which means the ones that can buy things are buying things, and the ones that can't buy anything are not buying anything. That could lead to some big disparities within our economy. Whose fault is all of this inflation? Well, like I said, the answer will shock you because it's actually everyone's fault. It's not one single person. It's not Trump's fault, it's not Biden's fault, and it's not specifically Powell's fault. Although I will say the Federal Reserve plays the biggest role in how inflation has grown in the United States over the last 2 years. Printing money by itself doesn't really do anything. I mean, just because you have more money doesn't really mean that you have inflation problems. When that money starts to get spent, though, is when you have problems. So additionally, while the federal government and our past presidents have played a big role in inflation, along with the Federal Reserve, it's also the American public's fault that inflation is this high. Just because the Federal Reserve gave you thousands of dollars in stimulus doesn't mean that you have to go blow that money all at once. Now, I will say that a lot of Americans needed this cash during the pandemic. They were out of work and we needed economic stimulus to keep our economy going. But there was also millions of Americans that spent this money when they didn't really need to. They saw it as free cash. But nothing is free. So the ones that needed it probably spent it the right way on things that they needed. But the ones who were still working and didn't really see any pay cuts, well, they went out and blew this money. And that's why the majority of Americans are struggling right now, because we have supply chain issues, because we can't keep things on the shelves. But like I said, the federal government isn't out of the woods here either, because the Federal Reserve and our past presidents have done a lot to contribute to inflation. From trillions of dollars to stimulus, to additional money printing on top of bills, to the Federal Reserve just throwing money at the New York Stock Exchange. There has been way too much money in our economy right now, and it's not functioning at a normal level. So in order to get it back to a normal level, we might need to see a mini crash in every single market, which ultimately might send us into a recession. But that's what it might take in order to get our economy functioning healthy again. But like I said, it all really depends on what goes on with our economy, which will lead the Federal Reserve to make a lot of their monetary policies, and on top of that, the federal government. If people continue to spend money like normal and everybody in our economy is pretty much employed, then the Federal Reserve can raise interest rates. Things will be pretty healthy. In addition, if the stock market starts to have a lot of healthy earnings reports, then they can pull a lot of their money faster because the stock market is getting healthy again. I think it'll be kind of a combination of both. I think we're going to see high inflation in 2022, but it's going to start decreasing as a lot of this money starts to shrink in our economy pretty much naturally, or unnaturally because of all of the inflation. But now I want to hear from you on this issue. Who do you think is responsible for all of this inflation in the United States? Is it former President Donald Trump, or current President Joe Biden, or Chairman of the Federal Reserve, Jerome Powell? Or do you actually think that it's none of those people and that inflation, like we're seeing it, was gonna happen no matter what went down in the US or in the world for that matter? As always, be sure to join the conversation below before you go. But that is it for me, everybody. If you like this video, be sure to hit that subscribe button below. Be kind out there, and I'll see you all in the next one.